Hewison here, co-founder of MarketClub, with your midday market update for Tuesday, the 12th of June. Well, political uncertainty creates choppy markets and investor frustration. What, if anything, has changed? The European problem is still here, hasn't gone away. The U.S. is up to its eyeballs in debt. Companies don't want to bring the money back to the U.S. Plus, we've got all these problems with the elections, high taxes, and the political uncertainty that just abounds. We also, on top of that, we have a Greek election on the 17th, which is also going to be really crucial. So what's an investor to do? The best advice I can give you is to go with the flow, don't fight the markets, and go with the trade trends. But also, you may want to give us a call for our personal one-on-one Market Club coaching. It can really help you improve your trading. The call is free and the consultation is free. So just give us a call, 877-219-1482. So let's get started with the day. And you can see with our plus 55 on the S&P 500, it's really kind of in a trading range now. But the pattern itself is really not that positive, in my opinion. And let me explain to you what I mean by that. Plus, we had a very short-term signal today on our daily triangles. But what I'm saying with yesterday's action, let me just scope this in just a little bit closer so maybe give you a better idea. So let's just look at yesterday's action here. And if you look at this day right here, now remember, this is when they were going to the Spanish. This is the first day of trading. We traded as high as this level right here and came all the way and closed right pretty much on the lows. But what we also did, we created what we call I call it a negative engulfing line. And this is basically, in Japanese candlestick terms, it would be a bearish engulfing line. So what happens, this particular market basically dominates the previous candle. So the key today is if we close lower than yesterday's low. So if this turns out to be, this is where we opened this morning, right on the lows, then we rallied, and we're sort of kind of locked in the middle here. But if we come down and close lower, if we get this as a red candle, for example, and we close like this, for example, this would confirm this as a top. So that's what we're looking for. We're looking for, if we lower close today, that will confirm this is a negative engulfing line and a top in the equity markets, and then we'll head back down. Not to say that won't happen anyway, because we are still negative on our monthly. That's the long-term trend. Only the weekly is peaked up, and that was today. And, excuse me, that was yesterday. And the daily is now back down. So you've got this mixed picture. That gives you the 55, and that really equates to a trading range in the equity markets right now. But the key to me today is going to be a lower close on today. This turns out to be a red bar or candle, and it closes lower than the previous day. I think that puts in a top, and we'll see this market come under pressure later today. So let's clear the screen off, look at our next market. And the next market we're going to be looking at is, let me just get to pretty much the same picture in the NASDAQ. That's coming up. And you can see there's a bigger engulfing line here. And again, if it closes below yesterday's close, which was 2,808, we're currently at 2,824, so another 16, 17 points lower. This is not going to look good for this market. And pretty much the same picture could be said for the Dow. Just the same pattern, the engulfing line. If it closes below yesterday's close, which is 12,411, then I think this market's going to be in trouble. So let's look at our next market. That's going to be silver. Silver really hasn't gone anywhere. So if we look at this, this is a daily chart of silver, 1 month. If we go back, let's say just 3 months, and that's really all you need to look at. And silver, which really hasn't got much going for it right now, is just look at this. This pattern it's really not much going, just sort of wallowing between these lines. We were oversold a little bit. Of course, we've improved from there, but generally speaking, we're right in the middle of the range. We said the market seems to be locked in between 29 and 28, and that's the levels for 29 here and 28 here. It's very tight. It will eventually break out of this range, but for right now, the best thing to do, in my opinion, is just to stand aside unless you're a long-term trader and you're short silver, or you should just be on the sidelines. I think it's just too choppy to do anything with. So let's clear the screen, go to our next market, and that, of course, is gold, which actually had a positive day today. Not to say things don't get positive for gold, but this is a positive day on the upside. As you can see, we've got two green arrows, triangles rather, the daily and the weekly, and only the monthly is negative on this market. So it's not to say, it's still not out of the woods in my opinion. If you look at this, we'll scope this out just a little bit further. It's easy to do with MarketClub. You just have to click on the little tabs here. It takes you as much data as you want to see. Maximum data, we go all the way back to 2004. That's enough to satisfy any gold bull. And so year to date, you can see the market's being just visually looking at this market, and sometimes this is the best way to do things, I think. Just visually, you can see that it's sort of going down. We need to do a couple of things. We need to stop making lower lows. There's the lower low, lower low, lower low, and this may be the turn up. We've just seen a move over here, which was right here, and we need to move this over, I would say, over the levels. Probably the 1640 area would be a big thing, 1650. I think that would be a turning point for the market. But to really get going, it's really got to clear the 1700 level, which is right here, which is quite a ways away. It's almost $100 away from where we are right now. Not to say it won't happen, but I think there'll be lots of time to get in this market. Right now, the monthly is negative. Only this one, daily and the weekly, are positive. So intermediate term traders can be long this market, looking for a move up to these recent highs around the 1640 area. So let's clear the screen off again and go to our next market. And the next market we're looking at is going to be the copper market. Copper really isn't, it's an industrial metal. I don't think this pattern we're seeing right now in copper is very positive. It looks to me like it just got this like little movement here. I think it's going to come down and probably go below there. Still in the middle point, this oversold, so not oversold. I think the pattern is going to be a little bit like this one, and I think that's the thing to look at right now. So let's clear the screen on copper. Definitely with a minus 100, I have to be negative on this market. So let's go to the next market. And the next market we're looking at is going to be crude oil. Crude oil made a new low for the move before rallying back. Now, here's something to look at. We've been talking about crude oil not being positive, and this is where the major trends really, really help you. You can see our monthly, weekly, and daily are all negative. Minus 90, a strong downtrend. Even today, we saw a move down to the 8107 level, which just eked out a new low between the 8121 that we saw on the 4th of June, and we came back. So it's not to say this isn't the bottom, but what it does say is the trend is markets don't make new lows and suddenly it's a bull trend. We need to see this market stabilize and build a base if it's going to go higher. But right now, the line of least resistance, which is one of the key things you do in trading, is on the downside, and I think that's going to be the key thing to look at. You can see we're getting down to this level we looked at right here, which is a close. That was a close of 79.70. Excuse me, I beg your pardon. The close was 77.70. But that's basically, I think the 80 handle is going to be a big handle for this market. But you can see right around these levels, just skip this out and let's put a trend line in here. But right around these levels here, the market tends to find some value, whether that's a longer term value. A lot's going to happen on the equity markets. If the equity markets keep going south, then this market's going to be on the defensive. I think it's surprised a lot of people. So let's go to the next market. In the next market we're looking at is the euro dollar, the euro against the dollar, excuse me, the euro against the US dollar. And that pattern continues, in our opinion, to be still negative. And I want to share with you what I think on that. So here we are. This pattern looks like it wants to go higher, but it's actually just the reverse. So if we see the market come down here and close like that, let's say just above the 124 level, be short, because we're going to take out the recent lows and take it down to 120. So that's definitely the way I want to see this. This is not a bullish, this pattern right here is not bullish. If anything, it's very, very bearish. So let's see how that plays out. But generally speaking, you have our monthly negative and our weekly. And you can see from 139.69, which takes you really way, way back, we've been negative. And from 129 and almost 130, the level right around here, we've been pretty negative. Would be very negative based on the weekly rather. So let's see how things play out. But generally speaking, the pattern still remains negative to us. So let's clear the screen and go to our next market. And we can do that in just a second. So here we are. We're going to the Reuters-Jefferies CRB Index. This is a great sign for inflation and deflation. And again, this trend continues to be down. We had a little pop, but that's coming down. The 270 level, in my mind, is a very, very important level. If we close below that level, I think we'll see another move and test of the recent lows, which is right around the 266, 267 level. And we're looking for a target in this market going down to the 250 area. So let's look at a couple of other markets we've got here. These are ETFs. We've got actually, let's take a look at Apple. I'm just going to move Apple right there for a second. Apple had their Worldwide Developers Conference yesterday, came out with some very cool tools. And the reality is Apple isn't acting Apple-ish, if that makes sense. We sort of had a very big down day. This is the conference, first opening conference day, closed right on the lows. Now this is a gain. This is something I want to share with you. Let me get this closer in so we can see. Now we talked about on the very outside of the program, basically a negative engulfing line. And that's exactly what this is. The action here engulfs this entire previous candle, which is on a Friday. If we close lower today, meaning like here, for the day, it confirms, I would say, obviously at 150, at 570. If it closes down, let's say just to enlarge that just a little bit. If we close down there, that would be a very negative sign for me in the sense that I think Apple at this point in time has probably put in a high based on this engulfing line. So let's watch and see how that closes today. So 570 is the big point to look at. And let's clear the screen and go to our next market. And the next market we've been looking at is an ETF. And the ETF we're looking at is going to be the Euro, ultra short the Euro. And again, I think this is a market that wants to go, when it goes higher, it means the Euro is going down. The trend is clearly up. I would be a buyer of this market as opposed to a seller. It's a little thinly traded, so not, I would say thinly traded. We're trading a couple of million shares a day, which isn't bad at all, but nonetheless, it sort of takes its lead from the Euro. So I would say if you wanted to get short the Euro, this would be the vehicle I would recommend for the moment. So let's go to our next market, also an ETF. This is the SDS, ProShares Ultra Short S&P 500. And again, you had a big outside day yesterday at the market closes. I would say over higher for the day, over 1705. Then I think you'd want to be long this market. It's only 15 points away from there right now. So generally speaking, I think this market's going to go higher. So meaning the S&P lower. So last market is the financials, the FAZ, or Z as they say in Australia and New Zealand, the Direction Daily Financial BA. So again, here, there's the positive engulfing line. If we close, I would say over yesterday's close at 27.29, it's currently trading 26.94. This market could move very quickly. This is more like a trading vehicle. But we've got our monthly long, still long. The daily just went long, and we were oversold. So I think there's a potential we see this market go higher. But if you want to learn more about all of this stuff, really just, as I say, I can't just say, just give us a call and see if our one-on-one Market Club personal coaching is right for you. You'll be surprised at the amount of time we put into this and also what you get out of it. And the cost will also surprise you. But no money right now. Just give us a call, free call, 877-219-1482. And also the consultation is free. It couldn't be better than that. But hey, this is Adam Hewison for Market Club. I'll see you tomorrow, same time, same place. Have a great trading day.